I have a feeling this is going to elevate Bitcoin in the eyes of not only the crypto world, but the investment world at large. And I have a feeling it's going to have more running room through the rest of the world. I think this is the way that this is Block's go-to-market to get into the rest of the world. And we think they're going to be very successful.
So then I'm assuming, Cathie, that you're going to hold to your Bitcoin forecast for, what is it, 1 million per coin by 2030. That still feels good to you.
Yes, and you can, sometimes you need to battle test. You need to go through crises to see who the real to see the survivors first of all, but really to battle test the infrastructure and the thesis. And again, we think Bitcoin is coming out of this smelling like a rose because of what I have mentioned previously. And I do think, though, the one thing that will be delayed is perhaps institutions stepping back and just saying, okay, do we really understand this? And once they actually do the homework and see what's happened here, I think they might be more comfortable moving into Bitcoin and perhaps Ether as a first stop,
You know, you
because they'll understand it more.
You mentioned Jack Dorsey. I want to switch gears if I can. And I was thinking about Twitter and Tesla. Like I said, there's so many things that are going on in our world right now that I feel like you are the person to comment on. How do you make sense of Elon Musk, someone you know, you've talked to, you've been an investor in Tesla for a long time. Are you comfortable with his actions around Twitter of firing people, hiring them back, the verified check, talking about people paying for it and then taking that back? Do you feel comfortable with this name? And I should put out that, right, you own private shares of Twitter and have talked about wanting to own more.
Yes, yes, we do. We owned Twitter for quite a while, and we sold it into the rumors that Elon was going to buy it because we knew there would be a lot of controversy around that. So it moved into the 60s. I think it got to 70, and we sold there and have been watching. Have been watching from the sidelines. But if you look at that model longer run, it has not delivered on the promise. And, I think opening up the algorithms, which we think he will do, and taking away the kind of human-driven censorship and allowing the transparency of the algorithms that they do put out there, allowing people to question them, I think is going to be very healthy. If you look at the daily average users, I think the various metrics that you can count daily, they have been going up dramatically. So, I know a lot of people who basically decided to quit Twitter because they didn't like the kind of censorship and so forth that was going on. So I actually like what he's doing.
It seems, interestingly enough, though, that a lot of brands don't like what he's doing, Cathie, and we've seen
Right.
some prominent companies pull back or at least pause advertising on the
Especially auto
platform.
companies.
Of course, I mean that makes sense. If you don't necessarily want to support the guy who owns Tesla if you're making competitive
easy out.
competitive
Yeah.
vehicles to Tesla, but bigger brands that are worried about brand safety. And I'm wondering,
Yeah.
I don't know what you're seeing in your Twitter timeline, but I'm seeing ads that are not relevant to me anymore and not relevant to me now, and aren't actually ads that are for companies. They're more like ads for influencers these days. It doesn't seem like it's necessarily moving in the direction of increasing revenue from an advertorial perspective right now.
Well, I do think that this is not just an advertising vehicle. In fact, that probably might diminish quite significantly in terms of its importance longer run. You'll remember that Elon started his entrepreneurial pursuits with a precursor to PayPal. So he a very long time ago had this idea of a digital wallet, a super app like WhatsApp in mind. And of course, took a big detour into another passion of his. We know he knows a lot about this world. And I think if anyone in the US can do this, I think he can. I think he'll surround himself by the right business leaders. He's not going to do this himself. If you look at Tesla, He's not, if you look at many people say, aren't you worried about Tesla? No, we're not, because of our work on electric vehicles. They are grabbing a disproportionate share, and will continue to do so, of a market that we think by 2027 will account for 85 to 95% of all cars sold in the world. So that's on automatic pilot. He's now working on autonomous, which we think is going to work. In fact, I just had the pleasure of riding in a cruise car in San Francisco, an autonomous car.
A GM.
Proof of concept. A GM. Just wanted to check it out. And I have to tell you, I love the ride. And I know autonomous is possible because Cruise and Waymo are doing it. And we think Tesla is going to do it in a much bigger way. So that's Tesla. But onto Twitter, it really needed to be shaken up. And I think
do you think he can make it be a great business and very profitable? And if so, how?
I do. Think about the amount of data that Twitter has, and it's proprietary data. And think about the combination of that and artificial intelligence. Remember, he has AI expertise and experts. I know he brought in some of his engineers, and they are going to, I think, surprise and delight, heading for a super app kind of product. And, by our estimates, and you'll find this in our big ideas, I think it was 2021, the value of each customer in a digital wallet should be, and when I say that, the market cap associated should be in the 20,000 plus range, because it's not just for financial services. It'll ultimately be for commerce, and AI is the glue that's going to pull this all together. And the data that they have, the data is the new oil. You've heard that. This is absolutely true in the case of Twitter.
Well, Cathie, I mean, the currency, Twitter as a currency, has worked really well for you. You've got 1.5 million followers on the platform. A lot of people see what you tweet. We saw eulogies last week being written for Twitter. It didn't end up dying, as many people thought it would. But what would happen if Twitter went away? And are you concerned about that?
It's been, and yes, we speak from experience. This is an extremely productive social network for us. It is our most productive. And, it truly is the global public town square. I can write an open letter to the Fed and put it out over Twitter. Now, do I think the Fed's going to listen to me? No, I don't. But that they may listen, the Fed board members may listen to someone who might think that I have something to say, which is simply a question. Wait a minute, how can you be unanimous 75 basis points at a time? How can you be unanimous when there is so much conflicting data out there, including an inverted yield curve now at 75 basis points? That's crazy. I think we're going to look back in history and say, what were they thinking? Unanimous? Commodity prices are falling. You've got excess inventories all over the place. We're seeing massive discounting. I think we're going to see deflation, and then they'll make a move in the opposite direction. But we need a steadier hand than that. So
wait, Cathie, when do you, because you've argued this and you've put this out there in terms of Fed policy, in terms of deflation, when do you think it will come?
I think we're seeing it. I think if you look at a lot of commodity prices, not only are they down 30 to some of them 80% from their peaks, they're down on a year-over-year basis. In fact, oil itself is almost down on a year-over-year basis now. The big pushbacks on this call we get are wages and rents. We're seeing rent inflation reverse quite suddenly and dramatically. So what I think we will look back in history and say, this inflation shock was the function of a supply shock caused by COVID, supply chain problems afterwards, and even more problems after Russia's invasion of Ukraine. If I can just take 1 second, I would like to give an analogy to the late 19 teens. We were in the middle of the massive, most massive innovation the history of the world had seen: telephone, electricity, and automobile, all at the same time. But we had World War I and we had the Spanish flu. Sound familiar? Now, that was much worse than what we've gone through. We've gone through nothing like that. But there were massive supply chain problems back then. And inflation peaked at 24%, right? In June of 1920. And by June of 1921, it was minus 15%. So I think that our 8 to 10% inflation, which is where it was at the peak, is going to turn around, and we're going to see some very big surprises on the inflation front. And you know who agrees with us? The bond market. Look at what the bond market is doing now. The long bond yield, 380, 75% inverted. That's telling us that the bond market is saying recession and or big surprises on the low side of inflation expectations. And it's probably both.
Cathie, unfortunately, we only have a couple of minutes left here. One thing we did want to squeeze in, we've been talking about it in the newsroom, that AllianceBernstein is getting ready to launch actively managed disruptor ETFs. And from what I understand, you pitched them, years ago. How does that make you feel? And, to see a firm that you worked at kind of doing a very similar thing or looking to do something similar?
Yes, well, AllianceBernstein, I believe, got the first fully active, fully transparent ETF in, I think it was early, it got it was approved in early 2013. So that's when I put my hand up and said, I'll do that. And there was a belief that ETFs were not safe, or there were a lot of arguments against it.
Right.
Probably the biggest one was mutual funds, which are much more profitable. I would say the economics there are higher than ETFs. How does it make me feel? The more the merrier. I think this is a fantastic wrapper for the end consumer. It's fully liquid, unlike mutual funds. You have to wait till the end of the day. Transparent, fully transparent. That's what investors want. It is more tax effective, much more tax effective. We're seeing mutual funds that are down 30% this year,
right,
but they're slapping their investors with 35% in capital tax gains. And then finally, it's more cost effective because all of what you see is what you get with these fees. There aren't a bunch of hidden fees. So it's a great wrapper for the end consumer. I highly recommend it. And we're happy that they are seeing the light now.